a spot on the Forbes list as, you know, a company who's provided impact not only to the average individual, but even to celebrities, even to influencers around the world, helping them make even more money. So, you know, in honor of this, in honor of us being on Forbes, we've decided to do a huge call today, right now, to give back to the people, to help you guys make more money from home. So there are no catches to this. This is a chance for you guys to learn how to make as much money from the markets. And you're taught by professionals that have been trading for years. You know, professionals that, you know, quite frankly, have the success that I only wish I had. So I'm a student today. I'm ready to learn. You know, you're going to get a good relationship with these individuals. We're going to bring on our host for today. You know, host goes by the name of Mehdi Ajami. He's going to go through a lot of information for you guys. But before I bring him on, I definitely urge you guys to get a pen and paper at hand. There's going to be a lot of information going to be covered. So it's going to be amazing. Yeah, perfect. So send out the link, guys. There's 780 of us right now. I believe there's just 1,000 spaces. So once that space, you know, once we reach that limit, no one else will be allowed in. So please do not log out of this call. Once you do, you will lose your spot. Yeah, guys. So the agenda of this call is, of course, to teach you guys a few strategies when it comes to trading. We, of course, want you guys to have as many four-figure days as possible. That's the aim, right? Our measurement of success is based on how much money the students make, right? That's a key measurement of our success. So with that being said, we want to make sure that you guys make as much money from the markets. All we ask of you guys is once you make your first four figures, you know, it doesn't matter how many times you make four figures in a day. Once you make your first four figures in a day, so over $1,000 in a day, I want you to reach back out to the person who sent you this call so that we could ask you to fill a quick 30-second survey for us, and it'll allow us to provide more impact and be higher on the Forbes list. So with that being said, guys, let's have fun. Let's get straight into it. We've now reached 800 people. Massive congrats to us. Please send out this link in the groups. Let's make sure we provide impact. Remember, it's not about what you do. It's about what you duplicate. It's about how you help people. So with that being said, let's bring on our amazing host. Goes by the name of Mehdi Ajami, aka Pips of Persia. So many of us have had the pleasure of learning from him. You know, he's someone who I met only 2 years ago, someone who knew nothing about trading, joined the platform with us, joined our community, and is now, you know, having tremendous success and is responsible for the success of hundreds, if not thousands of others around the world. So Mr. Mehdi Ajami, I'm going to ask you to unmute yourself and please bless us with your presence and show us how to make money from these devices. Thank you very, very much.
Good morning, good afternoon, good evening, everyone. I hope you're safe. I hope you're healthy in these difficult times around the world. And I hope you and your loved ones are continuing to work towards your goals, your dreams, and whatever it is that you want to achieve in the near future. Thank you, Yasin, for that beautiful introduction. I am so excited for this call today. I don't think you guys understand, because we have got such an amazing lineup for every one of you to be able to learn, whether you're just a beginner when it comes to your trading or whether you have been trading for years. Believe me when I say you will be able to leave this call with a lot of value gain. Now, my name is Mehdi. I'm better known as Pips of Persia, and I have been trading since January 2018. Since May 2018, this has actually been my full-time career. This is something that I've been doing full-time. So it's amazing to be able to let me put it this way. It's amazing to be able to reach stages that I never actually thought I would be able to. And that's something that I'm ever so grateful for. Now, what is kind of going to actually happen during this webinar is you are going to actually be receiving a lot of value from a lot of different educators in a lot of different concepts when it comes to your trading. And my purpose is simply be able to go through some of the very basic stuff, and more importantly, some house rules for what's about to happen today. So let me have my notes right next to me to make sure that I don't, you know, skip through anything. Now, first things first, let me see if I can do this. Okay. Go to the chat box and let me know where you're all plugging in from. I want to be able to see what country, what city you're all plugging in from. Your messages will be coming to me privately, so you don't have to worry about anything. Wow. UK, Leicester, London. Okay, we just got about, you know, over 200 messages, so I really can't believe reading all this. But wow, we're from all around the world. The chat box is literally blowing up. I'm gonna mute the chat box again, just because now it literally about 400 messages came through. But I'm glad that you're all excited. I'm glad that you're ready to hit the ground running. So let's start this call with a very obvious yet very important disclaimer. Please understand that none of us are financial advisors. So the advice that you are going to be receiving on this call is simply our own educational advice, or not even advice, our own education, our own journey. I'm going to put it that way. Trading involves risk. So it's very important to understand that you have to risk however much you're willing to lose. Okay. Any type of investments that you take after this call is your own risk, your own capital. Okay. We are simply here just to give education and no financial advice whatsoever, right? Past profits do not guarantee future results. One of the major things that we are going to be going through today is going to be myth versus fact. In an industry such as foreign exchange, that's revenue, 6.6 trillion a day. And that's the figure that was released pre-COVID, right? Pre-lockdown, it was about 6.6 trillion a day. Right now, I wouldn't be surprised if we're touching upon 15 to 20 trillion dollars every single day that's being traded within these markets every single day. Unfortunately, there are individuals that take advantage of such a big industry, right? And it's amazing to be able to be, on Forbes, to accomplish such a massive goal as a community for us to be published on Forbes magazine. So we are going to be, going through a lot of crucial stuff that you might have heard in the past about the truth about the foreign exchange, or how you should be trading, or how you should be, let's say, making money in these markets, for you to understand that there's a myth and there's truth. Okay. Now, house rules. Please take notes. If you haven't got a notepad and pen in front of you right now, I urge you to run to wherever you have to right now, get a notepad and pen and take as much notes as you possibly can, because you are going to get an exact guide on how you can become a profitable trader, or at least a more profitable trader, from straight after this webinar. So it's very important for you to take as much notes as you possibly can. Please keep all of your questions towards the end of every session. We have just reached 900 participants on this call, which is fantastic. But keep all of your questions towards the end, just so we can, just so it doesn't, distract the educators, I'm going to say. And okay, let's jump straight into it. I'm going to go through some very, very basic stuff, but this is very important. This is going to resonate with people that are either very new to trading or you haven't traded before. Step number one is having an account. Okay, you have to have a demo account or a live account for you to actually execute trades on. Goes without saying, we never recommend to, go ahead and deposit all of your live savings in your live account straight away. That is obviously not something that we recommend anyone to do. But the bottom line is you have to be able to have a demo account to practice these concepts on as soon as this call finishes. Now, we are not allowed to recommend any brokers. So I'm simply going to be showing you step by step on how to open a demo account using a broker that I personally use. In no way that's a recommendation, okay? You have to always do your own research when it comes to any brokerage, when it comes to putting your money with any brokerage. And let me actually break it down for those of you who don't actually know what a brokerage is. The best way I can describe it is brokerage is the middleman, is the person that connects your capital with the financial markets. As simple as that. So let's say you want to buy X units of a given currency, you don't necessarily just want to go to the post office and buy, for example, 10,000 pounds, right? It doesn't make sense. You would want to do that through your smartphones, through your laptop, and you do that through a brokerage, right? So it's important to do your own research when it comes to brokerages, to choose one that is not only regulated within the area that you live in, or at least has a regulation that you're happy with, but more importantly, gives you access to, good trading, for example, spreads, gives you access to low commissions, etc., etc. I'll leave you to do your own research when it comes to brokerages. However, let me go ahead and share my screen and actually show you. That's the whiteboard. So let me stop share and share again. Let me see. Okay. You should be able to see my screen now. Okay, so what I'm about to show you right now is how to open a demo account using the IC Markets brokerage. Again, you have to do your own research when it comes to this, but the steps are going to be very similar in terms of how to open a demo account with IC Markets. It's very simple and very straightforward. You literally go to icmarkets.com, you click on try a free demo, and the rest of it is literally as self-explanatory as you can imagine. You need to give in the country that you're resident in, your first name, last name, your email, and let me actually start to just do this randomly just so I can show you the next page after that as well. That's down to you if you want to, have that there. Now, where it says I was referred by an introducing broker, make sure that is unticked, okay? Especially if you're partnered with us already, there is no such thing as a broker referral. So we don't do any broker referral, right? So make sure that's unticked. But fill in your first name, last name, fill in your email, put your phone number, and obviously, tick that. Click on register. And this should take you to the next page, which is over here, right? On the next page, it's down to you whether you want to use MetaTrader 4, MetaTrader 5, or CTrader. That's depending on your needs. Majority of the people that we work with are on MetaTrader 4 platform, so you can get started with that. In terms of the account type that you want, raw spread versus standard account. Again, we use raw spread accounts, so you can use that as raw spread. Whatever currency you want your account in, whatever leverage you want to choose. I don't necessarily recommend go to 1 to 500 at the very beginning. You can stick with 1 to 100, and when you're a lot more confident with your trading abilities, feel free to increase that to 1 to 500 or whatever it may be, and whatever your initial deposit will be. Now, my recommendation would be to keep your initial deposit the same as whatever amount you will be depositing into your first live account. As simple as that. There's no point to go, for example, for a 5 million demo account, £5 million demo account, when on your first trading account, you're going to be depositing, £100 or £250. That doesn't really make sense. So you want to keep your demo account as realistic as possible. Okay. So, put however much you think your first initial deposit is going to be. Open your demo account, click on proceed. You'll get an email with the login details. From there, you just have to go ahead and download that MetaTrader 4 on your smartphone. You can trade that on your laptop as well. I personally just execute trades on my smartphone. Download that on your smartphone, and with the email that you get using the login and password, you simply go ahead and log in to MetaTrader 4. Now, that's a very simple process on how to kind of go ahead and open your demo account. Now, okay. In terms of risk management, I'm not, again, going to go too much into it right now. There's a lot of fantastic educators that I would love for you all to hear from. But I'm simply going to say it how it is. If you're not using position size calculator, then start using it. Okay. Position size calculator. So if you literally just search position size calculator on Google, the first link will be the MyFXBook position size calculator. This will be a calculator that will literally save your life. This will be a calculator that you will be able to utilize very, very well, simply because it helps you with managing your risk excellently, right? So all it asks is, okay, what's your account currency? For example, your account is in pounds. What is your account size? You've got £250 in your account, right? What percentage of your account do you want to risk? Now, we normally recommend 1 to 3% risk on your account, right? So let's say you want to, for example, risk 2%. How many pips is your stop loss? Now, for those of you who are a little bit more new to trading, you might not exactly know what stop loss is or what pips are, and this is something that we will touch upon a little bit later towards this training. But as a very quick way to put it is, a pip is just a unit of measurement when it comes to our trading. It's your centimeter when it comes to measuring length, for example, or liters when it comes to, for example, measuring volume or measuring volume of liquids, right? So a pip is a unit of measurement on how we calculate how much the market has actually moved by. It's as simple as that, right? So it asks you, okay, how much are you risking? What part of, how big is your risk? How many pips, how many centimeters in essence are you actually risking? So you would put that, for example, over there as well. Contract size, I'm not going to speak too much about that right now, otherwise we'll be here for a very long time. But long story short, if you're trading normal foreign exchange pairs, and normal foreign exchange pairs include currency pairs that come from the 8 major currencies, right? Now, what are these 8 major currencies? Okay, never mind. I was going to annotate, but we can't do that here. So these 8 major currencies include US dollar, Australian dollar, Canadian dollar, New Zealand dollar, British pound, euro, Japanese yen, and Swiss franc. So these are the 8 major currencies that we trade. And these 8 major currencies together give us 28 currency pairs, right? So if you're trading any of these 8 pairs with a good broker, good regulated broker, chances are your contract size will always be at 100,000. So you don't have to really worry about that. But there's actually a way you can always figure out your contract size on your MetaTrader 4. And the step-by-step guide on how you do that will be this. Open MetaTrader 4, click on quote section. On the bottom left, it will be. Click on whatever pair you want to trade. Click on details. Find out the contract size. It's as simple as that. So for those of you who are already using MetaTrader 4 as well, it's very simple to figure out your contract size. You simply open it, click on your quote section. It's normally on the bottom left. Click on whatever currency pair you want to trade. Click on details, scroll down a little bit, and you'll be able to find your contract size over there. You will see that for majority of the FX pairs, normally it will be 100,000. Then it'll simply ask you, what currency pair are you actually trading right now? So what pair do you want to execute these trades on? Let's say you're trading Australian dollar versus Japanese yen. Click on that and click on calculate. Down here, it will tell you what is your actual monetary value of your risk. So it says that 2% of £250 is going to be £5. So that's what it means by risk ratio percentage. You're risking 2% of your account size. Okay, so your risk is going to be £5, and it will tell you how many lot sizes you will be able to execute on your MetaTrader 4. Again, on your MetaTrader 4, when you're about to execute a trade, it will ask you how many lot sizes do you want to execute. Now, for some of you, lot size might not mean anything. This right now, me saying lot size or a 0.07 might not actually mean anything. That's okay. It's the beginning stages of your training, and I'm going to be helping you on knowing exactly where to learn more about MetaTrader 4 as well. So what I'm gonna write over here alongside of these is some of the most important at the very beginning stages. I mean, concepts that you definitely have to know. So be a master of MT4. Okay, know how to use MetaTrader 4 in and out. Everything about it, how to modify a trade, how to manage your risk on MT4, how to have your profits on MetaTrader 4, how to close a trade, open a trade, have pending orders. There's a lot that goes into it, right? Learn how to use MetaTrader 4 properly. From their risk management is another very, very, very crucial aspect of it. Always risk anywhere between 1 to 3% of your account. As your account size gets larger and larger, you'll understand that you don't even need to risk 1 or 2 or 3% of your account anymore. And after a certain stage, you might just be risking 1% or 0.5% or 0.25% per every position that you execute. But that comes over time. Now, from there, what I would say is psychology. And this is what I'm going to be wrapping it up with. Now, a lot of us have always heard about psychology and trading psychology and X, Y, and Z, right? But the fact is, I don't think a lot of us have actually spent the time to master psychology as a trader. Understand that learning the skill is straightforward. You're drawing lines on a graph. How hard can it be, right? So you have to go through a process of learning to draw these lines on a graph, to read these broken rainbow-looking things, as Yasin likes to describe them, right? Read these squiggly lines. It's not difficult to be able to learn these. Where did the notes go? There they are. But the psychology aspect of it is going to be something that you definitely need to master. So this is something that I'm going to finalize this part of the training with. I'm going to write it over here. Personal development. Development. There we go. Got there in the end. Personal development, right? Now, personal development is extremely crucial. You're about to do business, right? Trading is a business. It's a form of entrepreneurship, right? In any type of business that you want to participate in, you have to make sure to always develop yourself as a person. You have to always make sure to be the best version of yourself, so greed doesn't get in your way. So you don't end up risking 20% of your account because you think the trade is amazing. So again, we'll speak a little bit more about resources, about all of these stuff a little bit later on. But generally speaking, as of right now, you know how to, sign up using make a demo account for yourself, let's say. You know that you get an email, you can log into your MetaTrader 4 account using that. You have access to a calculator to manage your risk for you. Now, in terms of how you will be able to, actually learn how to use MetaTrader 4, actually learn about the risk management, I will go through that a little bit later in the training. I will tell you exactly how you can get access to that. But as of right now, I am super excited to go ahead and pass it to our next speaker in this afternoon, in this evening for some of you, or morning, wherever you are based in the world for that matter. Now, the next individual who's going to be speaking on this call right now is a gentleman by the name of James Reed. Not only he's a phenomenal leader within our platform, has a global organization of well over 130 people around the world that he's helping individuals literally be able to either replace their full-time wage using this industry or at least create a part-time income for themselves. He's also a full-time trader himself. He's been trading for well over 2.5 years. He got himself to the point that his family are also profitable traders now. Now that is the real flex. A lot of people want to flex using, swag and, watches and diamonds and this and that. But helping your family create another stream of income for themselves, that is the real flex, right? So I'm going to stop talking now, and I'm going to go ahead and pass it to our next speaker of this evening, none other than Mr. James Reed. James, back to you, my bro.
Hello. Can you hear me?
Loud and clear.
Amazing. Thank you so much for that, Mehdi. Brilliant introduction. I hope you all got a lot of value. I hope everyone was taking notes. And today, I'm actually going to go over, a bit about my journey, and more importantly, a strategy that you can take away by the end of this to make sure that you get the maximum amount of value. So
hey, just before you begin, I think your camera is a bit blurry. I don't know if it's just for me, but you might want to just maybe give the camera a rub. Maybe, I don't know.
Awesome. It auto focuses now and then. Thank you, Yasin.
All right, cool.
It's an interesting camera. Awesome. So what I'm going to do is I just want to know whereabouts is everyone at in terms of trading. One, if you're completely new to it, please put it in the chat, and put a 2 if you've got trading experience already. You're already trading and you already know how to mark up charts. Whereabouts are we at? 1, completely new. 2, you're all good. You kind of can navigate your way around the charts, analyze it a little bit. I'm just waiting for the messages to come through. We got some 1s, we got some 2s. It's looking 50-50 at the moment. 3 months in, newbie, some experience. Oh gosh, okay, we've got a lot of 1s. Amazing. It's good for me to know this. 2, but it's a weird start to the journey. Okay, no problem. Local stock market. All right, cool. We've got a lot of new ones on here. Thank you, ladies and gentlemen. Amazing. So at least I know how much detail to really go into trading and break this concept down. So just letting you know a bit about myself. As Mehdi said, I'm 25 years of age, introduced this concept by a taxi driver, and I'm so grateful that he shared this information with me, because it's the very same information that's allowed me to obviously quit my job at the age of 25 as a train engineer and bring my whole family into trading. My mum, brother, sister, every single one of them. So I'm actually going to be going over a few strategies which I do feel, well, my main strategy that I use, which I do feel will help everyone to exceed in this market. I just need to share my screen. If the host would be able to enable me to share my screen, and then we can jump straight on the bandwagon.
All done. Let me know if it works.
Thank you. All right, so let's see if that's gone through. Interesting. Okay, cool. Let's share. Lovely. So on that note, perfect. I always like to start off saying, you know what time it is? Yeah, it's time to start reading Pip. So today what we're going to be going over is a few observations which I've made in life, not only useful for trading, but in every area of your life, and also as an investor. So please make note of these 6 things, because we're going to go back to them throughout the course of this overview. So number 1, everybody does what everybody does. And this is the rule number 1 of really an investor, because when you understand that if everyone reacts in a certain way, then you can observe, rule number 2, observe the masses and do the complete and utter opposite. Think about Bitcoin. If everyone knew about Bitcoin, they would have got in years ago. When everyone did get in, it was too late. Everyone lost money. Everyone does what everyone does, and observe the masses and do the complete and utter opposite in life and in the charts. Bearing in mind, this strategy which I'm showing you is specific to the way that I trade. Yes, people might find success in other strategies, but I'm going to share with you the strategy which I found success in. Number 3 in life, we always want to buy cheap and sell expensive, whether it's a business, whether it's an investment. That's a philosophy we always need to bear in mind. Number 4, information is control. This will make a lot more sense the further we go into this, but just understand that the stuff we see off Google, the stuff we see off YouTube, that's controlled. If for those of you who like technology, when you think about the dark web, yes, a lot of people associate the dark web with negative things, but in actuality, in Google, we can only really see 3% of the information which is out there. So you've got to ask yourself, what happens to the rest of the 97%? And if you know how to use the dark web, you can access that. If you don't believe me, feel free to Google it. But just understand that the information we see is controlled by whoever wants us to see it. Awesome. Number 5, Forex was not made for us to win. Forex is, at the end of the day, a business. And they didn't just kind of decide, let's give everyone access to a $6.6 trillion market a day and let's all lose money. Nah, no one made that for people to win money. It's made for people to lose money. So you can imagine the information that you get, we have to be very careful where we get our information from. And number 6 is history repeats itself. The market is made up of patterns, and if we can identify these patterns in history, then we can earn money in the Forex market. So please have these written down because we will refer to them back when we go a little bit later in this slide. So what is Forex? Forex, simply put, is a form of investment. Just like you can buy a house when it's cheap and you can sell that house back when it's expensive, or you could buy, a part of a company when it's cheap, aka stocks and shares, and sell that company back when it's expensive, or we could buy a currency when it's cheap and sell that currency back when it's expensive. The only reason you might want to consider Forex is because it turns over $6.6 trillion every single day, and the barriers of entry are very low. Now, I'm sure a lot of you have seen Forex, they say 95% of Forex traders fail. That could be pretty scary, or that could be a challenge if you're anything like myself. And that's not because it's hard. It's just because of the information that we have access to. And that's what I'm going to be sharing with you today. So that being said, our goal is always to buy cheap and sell expensive. So let's go on a journey. Trend lines. These are pretty much areas on the chart where we can connect where the market keeps making higher lows. Like when they say draw a line of best fit when you've done maths, that's ultimately what trend line does. And ultimately what we expect is that when price touches a trend line, it will bounce off of it almost like a bouncy ball. So you see where I've done the circles, bounces once, bounces twice, bounces a third time, and the fourth time, guess what we're going to expect to happen? Why would we expect this one? Because history repeats itself. So trend lines, that's what a trend line is for those who are new, an area where price will bounce off of it, a diagonal line which connects the lows. So then we've also got an area of support. Support is a very similar thing. The only difference is instead of being a diagonal line, it's a horizontal line. It's a line which goes across the screen. And you'll understand why this is all relevant very, very shortly. So price gets there, it bounces off it like a bouncy ball. It bounces off it like a bouncy ball. Third time it touches it, it bounces off it like a bouncy ball. So when price gets there, what do we expect is going to happen the fourth time? Awesome. Now what I want to go over is resistance. So this is a third term right about now. Let's just recap real quick. Trend line, a diagonal line which connects the lows. An area of support is an area which price bounces off like a bouncy ball. And an area of resistance is an area where price cannot get above this area. Every single time it tries getting up there, it gets slapped around the face and it gets rejected. So it can't go above that area. So that's an area of resistance. Now, why might these be relevant? And again, bearing in mind, history always repeats itself. If it does it once, it might do it again. Key takeaway. So the question I have to ask everyone in this chat is, what do all of these have in common? Please put it in the chat. What do every single one of these patterns have in common? And this is going to be so insightful for everyone in here. Okay, I see stop loss. What do all of these patterns have in common? Maths, lines at all risk, lines repeatable, banks destroy them. Oh my goodness, liquidity. All right, I know some of you know where I'm getting at. They repeat, cannot lose, rejection, patterns. Awesome, patterns always happen. So basically what all of these patterns have in common is you can find them off of Google, you can find them off of YouTube, and you can find them off of Baby Pits. Brilliant, free information. Now, I have to ask every single person a question. Where is this information coming from? Who is a person who's allowing us, because remember, we only see 3% of the information which is out there. That's all we have access to by Google or any search engine, 3%. So the question is, where is all this information coming from? Why is it free? Why are we allowed to see free information? How does that one work? Awesome, the people who control the markets. I like that, Ismail. The people who control the markets. Be very, very, the government. I like that. Bang on the money. I see some of you, some of you say manipulation. Perfect. So exactly. The reason why that information is free off the internet is because it conditions us to think in one way. And that's ultimately why it is out there. So remember number 4, information is controlled. So let me ask everyone a question. Those of you who have tried drawing support and resistance, etc., we said that we expect that when price gets there for a 4th time, we're expecting it to reject, right? Because history repeats itself. And that's what we're all taught. Anyone who's taught themselves trading, you would agree that is what we are taught. But how many times does this happen to you? How many times have you marked up this area, bang, bang, bang? Look, it's happened once, it's happened twice, it's going to happen a 3rd time, and then, boom, you get stopped out. I see a lot of you, I see Composite Man, exactly. I see a lot of you seeing that one, it gets wiped out. So going back to our thing earlier, why is information on the internet free? Well, this is why, because they will teach you all to trade one way. And if they can make you think one way, then guess what they're going to do? How many times have you drawn an area of support? It bounces off once, bounces off twice, a 3rd time, and then it comes down to try for a 4th time, and then bang. Why did that not happen? I see a lot of you saying, cool. I see a lot of you saying that's happened to you so many times. I like to see that. But ultimately, the reason why this happens is because information is controlled. There's a reason why information is put on the internet, and it's not for our favor. It's not to kind of help us to succeed. Even with trend lines, it's like, okay, price bounces off once, 2, 3rd time, you know, we'd look to enter there. The internet will teach you, put your stop loss at the previous low, or maybe even 30 pips generically, and then price decides it doesn't want to play ball. And you'll find this happens over and over and over again. And it's not that Forex is hard. It's just simply because of the information we may have had access to. So y'all might be wondering, you know, why does this happen? No, this don't really make sense. Or it kind of does. Because remember, Forex is a business. For people to win money, and it's an unfortunate fact in the world, for people to win money, others need to lose money. Think about it. When you buy a t-shirt or something, all right, you've lost money. Whoever sold it to you gained money. If I was to say buy a house when it's cheap, sell it back expensive, you know, I guess as it went up, I gained money, an investment. But Forex is a business. It's not meant for us to win. So that's why they put free information out there, and then everyone will kind of be like, oh, great, this is brilliant. And then try it and it doesn't work. That is why the percentage is so high. It's not that it's hard. It's just most people do what most people do. Everyone learns the same way. So that being said, information is controlled. Forex was not made for us to win. And I called it Mr. Forex, but I noticed someone in the chat said the Composite Man. But I noticed, yeah, I'm going to use Mr. Forex for an example. And ultimately it says, you know, if we can manipulate everyone to think one way, then what can we do? What can we do about it? Who made note of number 2? Who made note of takeaway number 2? Please put it in the chat if you made note. You know, Mr. Forex says, if we can manipulate everyone to think one way, please someone finish the sentence. I see it, Sam. Do the opposite. Observe the masses and do the complete and utter opposite. So if we can make the people think that resistance is real, we can definitely wipe them out. Now, the reason why this is relevant is because, remember, in Forex, we said a key takeaway earlier is that we want to buy cheap and sell expensive, right? I don't know, for those of you that may or not know this, very, very important to understand. Very, very important. When you think about the example of a house, you know, I buy that house and ultimately I want that house to go up in value. If it goes up in value, I sell it at a win. If that house goes down in value, I sell it at a loss. Hope that makes sense to everybody. So the reason why that's relevant is when you're entering, say here, you're ultimately hoping that it's going to go up in value. And if it goes up in value, you sell it at a win. But if it hits your stop loss, and for those of you that don't know, a stop loss will automatically take you out of a trade so you don't blow your account. And you decide where you put this on the chart. So when you enter a trade, you predefine, I want to get in at this value. I want to get out and stop my losses at this value. But if it goes up, I want to take my profits at this value. So really, you don't want it hitting stop loss. So you got to think about it in terms of Forex being a business. They want you to buy here. They're attracting you here, almost like jailbait. So that's why they will tend to reach for your stop losses. Because if they reach for your stop losses, now what happens, instead of you buying cheap and selling expensive, now it's opposite. You bought expensive and you sold cheap. Does that make sense to everyone? If you sold expensive, if you bought expensive and sold cheap, you would be at a loss. And if you're at a loss, guess what? Your stockbroker, he's at a gain. That makes sense. So this is why the market is manipulated. And this is why generally you'll find manipulation happens a lot. So moving on, what can we do about it? I like everyone's answer. Observe the masses and do the complete and utter opposite. So without further ado, I'm actually going to share my screen with you and show you exactly what this might look like over and over. And I can show you on any pair, anytime, over and over and over again. So, all right, where are we at? So ultimately, what you want to do is put yourself in a position where you get in where others get stopped out. So most people, if you drew a trend line here, under the consensus, it's touched it once, twice, a third time. When it hits it a fourth time, you'd expect it to go up, right? And you notice it did go up, and then bang, it would have smashed out people's stop losses. And you can literally do this over, like back test it on your charts.
Can't see the chart.
Yep. You can't see my screen. Okay, let me do this one. That would probably help. Thank you, thank you, thank you. Beautiful. Now can y'all see my screen? Let's see, let's see, let's see. All right. So let's refresh. Amazing. So that being said, no, you still can't see my screen. Yes, now, perfect. Y'all can see my screen. Beautiful. So that being said, let's draw our trend line. Someone asked me earlier, how do you draw a trend line? Easiest way to do it, start off horizontal, keep moving it up and up and up and up and up and up and up until you get 2 or more touches. So this one here, you would have seen, all right, once, twice, 3 times a lady. No, I'm joking, it's not. But you would expect that, the third time it does it, it actually kind of goes down. With this one, you notice it shot up. And what you find a lot of people do, and giving you all the heads up, be careful when you move your stop loss to entry. I saw there are some people who are advanced traders. Those who are, there gets to a point where you decide you want to make the trade risk-free. Big tip, don't do it too soon. Don't do it too early. Because what happens is when you do that, the market will come down and end up stopping you out. So there's 2 big tips right there. Be careful when you move your stop loss up to your entry. And the second thing is you can't get broke taking profits. Make sure that we're taking our profits, because if you keep taking profits, you can't lose money. Most people lose money because they get greedy and hold on to trades for too long. So write those 2 things down and make sure we put a plan in place to do that. Because then what you notice is that as time went on, it's like, okay, once, twice, 3 times, boom, it didn't happen again. And the reason why is because when you think, if people entered here, there's always a saying, where is the money? They're always going to try to take out the stop losses. I guarantee if anyone entered here at this point, say if that's what the chart looked like, I can guarantee that if anyone was to enter at this point, their stop loss would have been here. And your brokers know that. This is why it's laid out in a certain way. And I can show you on this one, bang, it would have blew your stop losses. Then you got the big move. Likewise, if you drew a trend line, someone would have probably drawn one there. And you notice this happens over and over and over again. First, let's keep convention. First touch, second touch, third touch, and then boom, it hunted for stop losses. So I can literally do this all day, every day. But the main thing which I'm trying to get across is just be very careful how you implement the information that you learn off the internet. One of the big things about the way that it is that I trade is understanding rule number 2, observe the masses and do the opposite. If you know people are drawing trend lines, don't be drawing trend lines on your chart. Be very, very careful, because that's what most people do. And we've already seen that 95% of people who try trading fail. Okay, so that's how you play the trend lines. Get in where most people get stopped out. That's one of the big takeaways, which I think we've just covered. So what you notice is that when, say, the charts did get wiped out, being mindful of time, you notice that when these trades did get wiped out, you'll notice that it went where people's stop losses would go. Most people's stop losses would have been somewhere underneath here. And the banks know that. Don't forget, like, some people are like, oh, it's like they knew where I had my stop losses. Of course they knew where you had your stop losses, 100%. So one of the big giveaways, if you want to know that one, is get in where most people get stopped out. Big tip. You'll learn more about this. I'm being mindful of time, but you will learn more about this as we go on this journey. So that's how you can play trend lines. Look where people's stop loss would be and change your mind to think how it is that others would look at the market, how it is that the people who want you to lose money would actually be looking at these markets, and not someone who taught themselves off of Google and off YouTube. If that's making sense to everyone, please put a number 1 in the chat. Ultimately, what I'm trying to get at is you just have to change the way that you look at the charts. If you look at them differently, you find that you'll earn money differently. And that earning money differently will put you in the 5% margin. Awesome. I'm seeing loads of straight ones. Thank you, thank you, thank you, thank you. All right. So the second type of play that you can look for is where you look for areas of support to be wiped out. So where are we in this one? All right, let's see if I can find a clean example. Let's see if I can find one. Have we got any nice examples on here? Scanning, scanning, scanning. Well, that one looks good. And that one looks good as well. Cool, let's analyze that swing. That looks nice. Analyzing on the spot. All right, so often you'll find that there are areas in the market where equal lows get taken out. So where are we at? I'm just looking, hunting. That's not giving me any good ones. What about USD? Is that giving me any nice ones? Where does that swing start? That's not so bad. Okay, cool. Great. So what you'll notice is going off of areas of support, right? As we covered earlier. You know, price bounced off there once, price bounced off there twice, price came for the third time. So when you see areas of support, as the internet teaches us, don't fall for it, because they're gonna wipe you out before any big move happens. What you'll find they tend to do is once it comes down the fourth time, they're going to take out your stop losses again, because you're now going to sell the market back cheaper to them. You never want to sell the market back cheap. We want to buy low and sell expensive. And the best way to do that is, you know, when you see support, don't fall for it. Look for a candlestick which would have wiped out people's stop losses, which would have been this one. And the way you can kind of play this one is you look, you pick the open and you enter off of the open. Can I zoom out for someone who asked for me to zoom? There you go. I hope that one helped. So I'm hoping that helps in terms of 2 plays which you can do. And what I would like you to do is feel free to play around with this one. And being mindful of time, I have to now get ready to jump off because there's going to be a few more speakers following me. But that is 2 main concepts that I would like you to do. Make sure you're just observing what everyone else does. Don't do what everyone else does, but make sure you're trading slightly differently to that. So on rounding, oh, I see turtle soup. I see too. Anyways, is pause. What I'd like to do is wrapping up on this one, bringing on the next speaker, is really and truly, like I said, I've only shared a couple things with you. Apologies that I couldn't really break down. You'll find that when you get me talking about charts, yes, that is my passion. I absolutely love trading all day, every day. And I've actually applied to become an educator on the platform as well. Like, that's how much gratitude I have. Because if it wasn't for that taxi driver, then I would have never like been introduced to trading, and I definitely wouldn't have been able to bring my family into trading. So I have so much like loyalty, trust and respect, not only for the company, but again, because of the journey that brought me through and the changes they've made. So what I've covered with you is only really a fraction of like stringing a trade setup together. And really and truly, I did learn this obviously of the educators from Trade House. So much gratitude towards them. And for those of you, I see a lot of you are customers as well. For those of you that are wondering their schedule, these are the educators. I will give you about 5 seconds to print screen this one. For those of you that want to dig into that strategy, for those of you who want to dig in to making sure that you're not trading like the 95% and you're trading like the 5%. So on that note, ladies and gentlemen, 6 key takeaways from today. Everybody does what everybody does. Step number 2 is observe the masses and do the opposite. This is prevalent in all walks of life. Number 3, buy cheap, sell expensive, always in life, whether you have investments or a business. Number 4, understand that information is controlled. So make sure that, bearing that in mind, we're focusing on what it is that the winners do. We're focusing on not what the losers do, we're focusing on what the winners do, because history likes to repeat itself. Remember, Forex was never made for us to win, and history always repeats itself. So observe those patterns and let's play our games, not theirs. On that note, ladies and gents, I'd like to thank you for your time. Trade safe, trade smart, and please don't trade too often.
Wow, 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 wow. What an absolutely fire training. Tell you what, let's go back to the chat box. This time I'm going to open the chat box so everyone can see the messages, okay? Put it to all panelists and attendees. Put a 111 in the chat box just to show gratitude to James. Thank you very, 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 very much, James. Wow, look at those. Look at the messages go. Jeez. Look at that. Wow, 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 wow. Okay, I'm gonna stop the chat now. Now, all I want to say is what an amazing training, what an amazing breakdown. And it's so crucial to understand in today's world that the information is very heavily controlled. And the person who knows is the person who makes the money. The way I like to say it is he who controls the candle controls the world, okay? The candlesticks in Forex, that's what I'm talking about. But for those of you who are a little bit more experienced in the trading game, or for those of you who have got the passion, who've got the drive, who've got the vision for you to want to become a full-time trader, for you to want to, have this as your maybe primary source of income, then this style of trading, which is where you are trading similar to the institutions, or you're using the concepts that institutions themselves, big financial institutions use to trade, if you start to apply these similar concepts to your own trading style, then game over, right? So big shout out to James. Thank you very, very, very much for going through that. This style of trading, especially when it comes to the Trade House educators, is described in such a beautiful way. For those of you who haven't watched the course already, you've got access to it at bouncebacklaunch.com. So all you have to do is you have to go to the website, bouncebacklaunch.com, click on the sniper training and start making your way through those videos over there. It's fantastic. They do a lot of London open sessions, New York open sessions that you can plug in live, trade live with them and take their setups. So it's fantastic to be able to have this community of people around you. But what I'm going to do now is I'm going to introduce our next speaker. Now, I'm super excited to be bringing on this individual, right? Simply because a lot of you know him and a lot of you have learned from him. And a lot of you know him as Mr. Sniper or the Bank. He is one of the most phenomenal traders, one of the most talented traders that you will ever come across. A gentleman that goes by the name of Makan, someone who's, although a university student, believe me when I say his financial knowledge is probably a lot more than the lecturers and the teachers at his university. Now, he's also been trading for well over 2 years as well. And for those of you who work closely with him, then you know the type of risk to reward that he has always looked at as well. And he has always managed to achieve as well. A big portion of trading is understanding that you want to risk as little as you can, yet get as much out of the market as you possibly can. Some of the risk to rewards that we look at on a daily, weekly, monthly basis are the type of risk to rewards that are industry shaking. And that's exactly what Makan is going to be going through. So without further ado, I'm going to go ahead and pass it to my brother, Mr. Makan.
Yo. Let me slap my camera on. That was too sick. I hope everyone can hear me, everyone can see me clearly. Mehdi, bro, thank you for that introduction. James, bro, you just smashed that. It's kind of hard for me to follow up when James gives a blockbuster train like that. But I want to say, first of all, I hope everyone's safe. I know it's kind of a tricky time, everything that's going on in the world, but it's amazing that we've got 1,000 people together to hop on this call and hopefully help a lot of people make 4 figures in trading. So another thing I want to say real quick is that Mehdi spoke very kindly of me, and it's crazy because when I first started training, he was probably the first person I really looked up to when it came to this industry. I remember I was hopping on calls. This guy probably didn't even know I was on them calls, and I would look at him and I would try and learn from him. So it's very, very humbling. I'm very grateful that now I can sort of stand shoulder to shoulder with him. I still look up to him. He's a huge inspiration to me. But yeah, I know it's crazy, man. I just thought I'd share that little insight with you. But just while I real quick, bro, do you wanna allow me to share my screen? If the host can just bring that up, and then I'll give a little intro about myself while I do that. I don't know if Yasin or Mehdi, bro, if you wanna hook me up as able to share my screen.
Let me get that feed now,
Yeah, sure. Yeah, but guys, like Mehdi said, I'm a university student. I know a lot of you guys probably university student, and you're probably thinking, how is it that really, I can. How is it that I can trade and juggle all them kind of things? And I'm going to break them things down because the truth is, the things that I'm going to talk about, what I'm going to try and break down in this is how you can actually manage trading alongside your lifestyle. Because what you see on Instagram, what you see on the internet about trading, all this kind of stuff, it's amazing, but life gets in the way sometimes, and there's things that can get in the way, family, work, uni, whatever it is. So the philosophy that I try and adopt, and the stuff that I've learned from certain people I'll refer to later on, it's just that idea of trying to trade a bit less and profit more. Let me check the chat box real quick. Okay, I can't see chat box, guys, so I'll answer all questions or anything like that at the end. But yeah, so essentially, the method that I like to trade with is I like to trade less. I like to trade less and profit more, and this is all through the art of risk reward. But this is something that James did touch on, and even Mehdi touched on as well at the start. But it's a truthful thing that it carries itself all throughout life and all throughout trading. So, in this training, what I'm going to try and deliver is a couple of reasons why, I think maybe sometimes traders fail. And then, on the flip side, what is it that makes those elite traders or people that are successful in this industry? What is it that they do that we do? I don't think there's anything special about these kind of people that are smashing the industry. That's not really what I think. I genuinely think there must be things that they're doing, or things that they've understood, or things that they're listening to, etc. That's the reason why they're so much better. Ronaldo, Messi, whatever. They're amazing footballers. They're probably God's gift. That kind of thing. They've got amazing talent born into them, but it's not like they didn't do anything. They must have had to go through certain training, certain practices, certain mindset training, whatever it is to get to that stage. And then I'm going to try and deliver a little sharp breakdown as well, just so you can be like, oh, can this guy actually trade, whatever. So I don't want you guys to think that I'm some sort of forex guru. I'm not. Trust me, any mistakes that you've made or whatever, I've made them. And when I say why the traders fail, it's more to think, what has held me back, and what have I seen that the same things that have held me back, what have I seen them hold other people back, and that kind of thing. Because I'm a real person, and I'm gonna give you guys real advice and things that help me on my journey. I think that I really think will help you in your day-to-day thing. So just to start, what is it that causes traders to fail, or things that they struggle with, or what is it that holds people back? People say, oh, it's because they haven't got the right strategies, because trading psychology. These are all important things, but I'll be real. It all comes down to the first 2 bullet points: greed and wrong information or lack of information, which is pretty much the whole delivery of what James went through. If you don't have the right information, you're going to be stuck. You need to have access to the right information. And really understanding of what trading is, this is the biggest thing. When you take a step back, you chill out, take a step back, you look at what trading actually is, and you understand that you just have to not necessarily trade without complete emotion, because you're not a robot. But if you can step back and understand, you just need a system that's going to enable you to do less and make more money by doing less. That's something I'll touch on later on. If you ever look at a successful person you look at someone that makes a load of money, but they don't do that much. That's the truth. It looks like they've got loads of time to enjoy themselves and that kind of thing. So it's the same thing when it comes to trading. You know, people that overtrade, people that spend the whole time all day, every day in front of the charts on their laptop or whatever, trying to catch every single top and bottom, try and milk the market out of every single pip. They talk themselves in and out of trades. It's just overtrading. You need to step back, take a look at your trading as a collection of trades, you know, and observe it in that kind of light, rather than you having to perfect the markets, that kind of thing. And again, you know, exactly what James spoke about. If you're on the wrong side of the market, you know, it's almost like you're trying to push a big boulder up a hill. I think, you know, something I made told me before. If you're going against the banks, institutions, hedge funds, it's like, why would you want to be going against them? You want to be on their side. You want to be, you know, almost in their slip line, you know, just behind them, you know, working off of the clues that they leave in the market. So moving on from that, what do I see? You know, what are the people that I've tried to duplicate myself? What do they do that I think makes them successful? You know, the biggest thing is that they trade like they're professional. They trade, you know, if you want to make a living, out of trading, you want to make a killing out of trading, but you're just going, you know, trigger happy on your phone. That's not exactly, that's not a professional trader. You have to act like a professional trader, document your trades properly, you know, almost trade. This is what I always say, yeah, trade like every single person on this call right now was logged into your MT4 and they can see what trades you're taking. They can see what you're doing day in, day out. Another thing that helps traders to, you know, succeed, you need to have an understanding of market mechanics. Essentially, not just drawing lines on a chart and being like, yeah, because this happened, because this line was here, this is what moved the market. You know, for example, no, not disrespecting this kind of style of trading, but do you think that, let's say for example, you know, Yasin draws a trend line on his trading view or whatever, do you think that the investors go out and buy currencies just based off that line that Yasin drew on his laptop? No way. I understand there's real market mechanics that drive the market. These institutional, you know, influxes of money basically, and this is just them responding to the news, to their own objectives. When they talk about composite man, the invisible hand, all these kind of things, understand that there are operators that operate in these markets that have objectives of where they want to take price. They can say, okay, cool, this year we want to take the pound here, this year we want to take the euro here. They have objectives, and a lot of the way that we trade, you know, I'm trying not to go too complex for you guys. I know a lot of you guys are beginners, but the goal is that we follow these big, you know, this big invisible hand, you know, the composite man, and, you know, we just piggyback off them. It's the truth. You know, we make up such a small percentage of the market. Why are we trying to go against the rest of the market? You know, we'll just chip away at what they can offer us. That sort of leads into the last thing. You know, once you have the skill, once you understand how the market works, the true mechanics of the market, the true drivers that move the market, that make the market go up and down, not Bollinger Band, not indicators, you know, not bashing on them, but they're derivatives of price. They don't define price. They don't define investor responses. Once you understand that, and once your psychology is down, it comes down to risk to reward. It's probably the most important thing in trade. People say psychology is the most important thing. You could have amazing psychology, but you could have a dead strategy and really bad risk to reward, and you'd probably lose money, right? So it's probably not even worth it. Equally though, you know, skill and psychology have to come hand in hand. Now, I did mention, you know, at the start of the call, what is it that makes someone successful? That kind of thing. It's the kind of person that, you know, you see they don't do much, but they end up making a load of money. And that's the exact same when it comes to trading. If you want to you want to be a successful trader, you essentially want to make more doing less. What that means is you place less trades with higher risk reward. And if you guys don't know what risk reward means, I'm going to break it down in a moment. But you place less trades with higher risk reward. All this means is essentially, you know, if you're going to place a load of trades, you want to win more than you lose. So you have a good strategy, you have a good methodology, good way of looking at the market. And this means that when you win, you know, if you're managing your risk properly, this means that you're going to apply your strategy, all that good stuff. You know, you're going to win more than you lose. And every time you win, you want to win big. And every time you lose small. And that is what risk management, that embodies all of that. When people say, oh yeah, man, I need to work on my risk management. That's such a big subject to work on. If you want to work on your risk management, that's so many things. That's not just about using the correct lot size. That's not risk management. It's such a bigger thing. It's about, you know, the number of trades placing, the risk reward, so many things, the way you filter yourself out of trades and that kind of thing. But guys, the biggest key thing to take away is that you want to trade with high risk reward. You know, the reason it's beneficial I'm telling you guys, what is the reason that we trade? We trade to make money, that kind of thing. You know, let's not sugarcoat it. Whatever it is, you trade to make money and to be free. But if you have to spend 12 hours a day in front of a laptop screen when you could be with your family or whatever, you may as well go get a job. What are you trading for? You may as well go, I don't know, work at JP Morgan's or something, you know, go trade there. If you're going to work every single day, the truth is you want to be spending as little time as possible on the charts. And you just want to know exactly what to do when you're on the charts and use that time effectively. So just moving on to what risk reward is, it is the ratio of what you risk to what you're going to reward yourself. Exactly what it says on the tin. So one little thing that you need to understand is that when it comes to risk to reward, these two positions, right, that I've drawn in the thing, this is a 1-to-1 position, and it's a 1-to-3 position. This 1-to-1 position means, okay, cool, if I lose £1, I'm going to win £1. It's exactly the same. When it comes to the 1-to-3, that means if I lose £1, you know, on the flip side of that, if I win the trade, I'm going to reward myself with £3. And that's essentially, you know, the way risk reward works. You can make this huge. You could have 1-to-200, 1-to-300, 1-to-500 trades, 1-to-1,000 trades, whatever. Obviously, it's not quite as simple as that. There's a lot of skill that comes down to it, and the way in which you have to be accurate, that kind of thing. So just so you guys can get it in your head very simply, just to quickly clarify, you know, if you don't understand what risk to reward is, guys, this thing I would recommend. When you trade 1-to-1, it's not really worth it, you know. If you're saying, okay, cool, if you place this trade, you pretty much got, you know, you're going to be £1 up or £1 down. It's not even worth it. You may as well keep that pound safe, you know, you keep that pound safe in your pocket, whatever, go buy Snickers or something. If you have a 1-to-3, it's a little bit more attractive, you know, because, you know, I'm risking £1, but I'm going to reward myself with 3 times as much. So this is something that's really powerful. And next time I'm going to kind of show why it's kind of powerful. Now, you lot might have heard this many times, but deep how powerful this thing is. You know, let's say you place 10 trades, and every single trade I'm going to use 1-to-3 risk to reward. Let's just say, you know, every time I lose a trade, I'm going to lose £1. Yeah, that's my risk. No matter what happens, no matter what my risk reward is in general, if I risk that £1, I'm going to lose that £1. You know, if that trade loses, that's minus £1, right? So on the flip side of that, you know, if you win that trade and you're +3 because you've got 1-to-3 risk reward, you know, let's just say, for example, you took 10 trades and the first 3 trades, let's even just say you don't even know nothing about trade, but you place 3 trades. You know, you just take 3 trades, and the first 3 trades win, and you're loving life. You know, I'm not going to bore you guys on maths, but on the screen you can see 3 times 3 is 9. You'll be up £9. You're going to be laughing. I know you can buy Nando's or whatever. And then let's say you get all upset, you get all excited or whatever because you just won 3 trades in a row, you're flying, and then boom, you just start placing random trades, and you lose the rest of the 7 trades. You know, they don't go so well. You now be at a loss of £7, but because you still won those first 3 trades, you're still gonna be up £2. Now, if you look at this is something where you've only been right 30% of the time. And I'm not being funny, but you could flip a coin. That's 50-50. You use a strategy. You get access to the right information, access to the right mentorship, this kind of thing. Operate in a professional manner, trade less, profit more with correct risk reward. This is the kind of thing that happens. You know, understand that I don't want to gas anything, but you know, the people that are on this call, people that are trading, you know, in our community, they strive for excellence. They're not striving for a 30% success rate. They're striving for 60-70% success rate. And you know, it's culture now that for 1-to-3 risk reward is almost like a minimum. It's a minimum. It's a baseline thing that gets set in this community, and people are really, you know, working to, you know, go even further than that. So now the rest of this, I'm going to kind of break down some more, not nitty-gritty stuff, but stuff you can actually go out and apply. Like stuff like, you know, you guys will learn strategy. I'm going to tell you guys exactly how I trade, you know, all my trades, everything. So risk reward is an amazing thing. And, you know, this is something that Mehdi shows me a couple of times on call, is that, look, if you wanted to maximize your risk reward, you wanted to go on TradingView, and, you know, I'll break down some chart stuff later on, but if you wanted to maximize your risk reward, in theory, you could do that easily, right? You could just put a 1 pip stop loss and a 1,000 pip TP, and it'd be a 1-to-1,000. But the truth is, how do you know that you're going to refine that entry zone? How are you going to be that accurate? You're going to refine it to that 1 pip. You know, I'll be truthful. You know, you're not going to be able to. Well, you can do it, but you know, there's different ways in which you can do that. If I say, okay, cool, the pound's going to shoot up to there, and then between 1.19 and 1.19001, it's going to reverse. You'd be like, yo, you're crazy. It doesn't make any sense. The truth is, this is how we like to trade. You know, we like to look at the bigger picture, almost like you're looking at the whole book. If you was going to look at a book, right? If you was going to read a book, you wanted to find something about the book. You're reading a book and you go to the contents page and it tells you, okay, cool, this chapter is about this. Okay, cool. Then you go into that chapter and you read through the chapter and you look a bit further. It's the same thing when it comes to the charts. I'm not going to go right to the page number, to the line, whichever line it's going to go to the 5th word. I'm not going to try and pick that before I've even opened the book. It's the exact same thing. I'm going to look on a higher time frame. That's going to give me a rough area. That's going to give me the chapter of the book that I need to look in, that I need to be paying attention to. And then I use the lower time frames. And James didn't really touch on this, but it sort of leads on from what he said, is that if you understand that the things that he showed you, all those concepts, trend line liquidity, support and resistance, these kind of setups that you see where stop losses get hit, this happens on every single time frame because the markets are fractal. And that is something that we actually use, because the same kind of patterns that we see on a 1 hour, 4 hour daily chart, you can see on it a 1 minute, 3 minute, 5 second, 15-second chart. It's almost like you don't even need to look at the time. You can just look at the charts and try and decipher what they're telling you. So the key to high risk reward is looking on a higher time frame to give yourself your targets, your main areas of interest, and then just going on to the lower time frames, applying the same institutional smart money concepts and negotiating your entry that way. So this slide is how do you trade simply. I understand there's a lot of big words or whatever, but I'm going to break it down. So the first point, it says narrative versus algorithmic. Now all that means is the easy way I'm going to think of this, when people say to you, oh yeah, picture tells 1,000 words. That's how we like to trade. We look at a picture and we try and think, what's it telling us? It's called understand the narrative of price. You hear this thing, composite operator, composite man, smart money, hedge fund, blah, blah, blah. They're buying and selling here. All it is, we understand that there's big players in the market and they leave footprints. And where they leave footprints, that's a clue for us. We can spot that on the charts. We can look for where people stop losses got hit essentially. And then we can have a look at where their stop losses might get hit later on, and that can be a target. The contrary to that is algorithmic trading, which is where you're not really looking at, this doesn't necessarily mean you're trading with a robot or nothing, but it's the algorithmic approach to trading where you might have a few indicators, and then when you tick a couple boxes, you execute the trades. That's more, you're not really just dictating the narrative of price. You're more just ticking a few boxes and seeing it. There's nothing wrong with that, but it's just different style. Now, this is how I've learned to trade. The person that first introduced me to the style of trading, Justin Saney, I'll touch on him a little bit later on. But essentially, like I said, we never want to be pushing that boulder up the hill or up the mountain. We want to be going with it. We want to be have the wind behind our sails, all that kind of thing, working with the banks. So the first thing is that we trade trending markets. All that means is the market's flying up. I'm not going to try and sell it. I'm not going to be stupid. The second thing is we look for institutional intervention. What that means is understand that we're trading with pennies and pounds and thousands, whatever. Banks, institutions, hedge funds, smart money, composite man, whatever you want to call it, they're trading with a lot more capital than us. When we place a trade, it don't really move the market. I can't hit someone's stop loss, if I wanted to. But banks, hedge funds, institutions, they're the ones that inject so much volume into the market, and that's what makes the big moves that end up hitting your stop loss when we look at these retail patterns. So all that means is, step one, get the right direction, trade a trending market. Step two, look for areas, look for that footprint that the big banks and hedge funds have left, and then we use that as a reference point. And then thirdly, what we're going to target as well. They've taken our stop loss here. When are they going to take the other retail traders stop loss? What's the next reference point? And what's the next bait area of support or resistance that they're going to take on the other side? And this is what we call liquidity. So we target areas of liquidity, if that makes sense. Now, the last bullet point says structure, order flow, Wyckoff, entry concepts upon fractional nature of price. I know it sounds really complex. It's basically the what I just explained, but there's a few more additional concepts now. Don't get scared or nothing. I'm not going to touch on them, but some of that is touched on Go Live, and some of the things that James wrote down in terms of the trade house schedule. But real quick, let me see if I can do a new share real quick. I might have to bring this up. I just want to break down a trade that I took recently, because it just applies all of these things. Now, actually, this is the final trade, but I'm gonna try and bring up a cleaner chart real quick. Okay, cool, perfect. Let me go replay mode, and then we'll just bring this right back. So, guys, I hope this doesn't sound too, this isn't too complicated for you. I'm just gonna minimize something. Okay, everyone see my screen real quick? I just want to check. Anyone wants to just text me or something? I'm pretty sure you guys can. Okay, perfect. Now, looking at this trade, what was the first thing that we sort of spoke about when it comes to look at a chart? The first thing was trade a trending market, look for the direction. Now, I don't know about you, but this is kind of obvious that it's a downtrending market. The market's bearish. Anyone who studies more advanced things, this pair Euro GBP on a high time frame is looking kind of bearish. So you guys will understand that from Wyckoffin perspective, all that kind of thing. But you guys remember, what James wrote down when we had a trend line, and he drew this trend line and boom, 1 bounce, 2 bounce, and you think that that third bounce is going to be, it's going to perfectly drop. But then what happens? Boom, they finesse it. And this is what we call when the composite man steps in and he finesses everyone's stop loss. This is why I drew this red box here, because I'm now looking, okay, cool, they stepped in here. This is where they intervened into the market, and now I can look to, I know they're gonna have to come back there to correct that manipulation. This manipulation that you see in the market, it can't go uncorrected. It has to be corrected, return to equilibrium, balanced, that kind of thing. So this was my point of reference. We had a trend in market. If you guys look at structure, we had this break of structure that resulted from this intervention. In terms of the last thing, so the first thing was identify trend in market. Second thing was look for an area of institutional intervention, and then the final thing is looking for a liquidity target. And this is, you see how we have 1 bounce, 2 bounce. We think it's going to bounce there, is it going to finesse it? Or I was kind of hoping that would finesse it from here. So the objective of this trade before I actually dived into executing it was market's going to come up here. It's going to revisit this area where there was intervention, and it's going to come down and hit this liquidity target. That was my general bias when it came to this trade. Now, I'm going to be wary of time, but I will break down briefly how I actually took this entry. It's only going to take like a couple minutes, and then then we'll kind of wrap it up after that. But essentially, what I like to do, what I broke down before, is I've got my chapter of the book that I'm going to go read now. That's the kind of thing. I've got that high time frame area that I'm going to look at, and now I'm looking to execute on a lower time frame. So let me go a slightly different time frame, and now I'm not even looking until we even get into this area because we're not on my chapter yet. But the way I looked at this, I think I entered this trade on 1 minute. Now you guys don't even need to look at what happened, in terms of the time frame. But I'll do the exact same thing that we just did before. We had this area of liquidity, this, equal highs, whatever you want to call it, that James broke down before. Here, there's all liquidity there, and it got finessed. And then my entry, we'll just draw a horizontal line here. This is the area where there was intervention, and then boom, I would have hopped in there. This is how I had this entry. So I feel like risk reward was something like 1 to 30, 1 to 34 or something like that. So we'll see how this played out after that. It pretty much crumbled, and I'm pretty sure it's going to keep crumbling. So that was a little insight into the kind of trades that we take and that kind of thing. If you guys want to know how I actually learned this from, like I said, Justin Saini was a person that taught me this, introduced me to this strategy. The other person that I learned a lot from is John Dollery, and these two individuals, they actually partnered with a steady product. This flash risk reward, the exact same kind of things what I just showed you. Okay, same my internet's unstable real quick. A swing intraday stage. All that means is it could be 1 or 2 or 3 days maybe that you'll be holding a trade for. They do live education, live trading, trade idea service as well. So just as an example, just so you guys can see, this is as simple as it is. Just as an example, similar style to the way I trade, a trending market. They're visiting an area of institutional intervention, and they're targeting liquidity. That's what these blue lines represent. So this is something I learned very early in my trading career. This is the thing that I'll leave you guys on, is that understand that you want to copy. If you're going to do anything successful, you want to become good at football, whatever. You're not going to copy someone who's bad at football or who sucks at football. You're going to copy someone who's the best and the most elite. You're going to try to take penalties like Ronaldo, whatever, free kicks like Messi, whoever it's going to be. You're going to copy the best people. That's the exact same approach I had when I came to trading. I saw people that were killing it in the game, John Dollery and Starboy, and a couple other people as well, Mehdi, whoever, and I'll duplicate them and I'll copy them. That's the truth. I'll work my hardest until I had the same kind of results as them. But yeah, guys, I hope that makes sense. If you have any questions, the chat box is looking good right now, but yeah, absolute snipe. Yeah, no, chat box is looking good. If you have any other questions or whatever, just hit me up later. But I hope that all makes sense. And yeah, with that, if you are plugged into a platform, make sure you guys are sleeping on steady, plug into live sessions or whatever. If you're not, then you reach out to someone. But with that being said, guys, I'm gonna please your entry on M1 again. Explain. Okay, let me just close this chat box. If you drop me a private message or something, or I'll try and put a link to something in chat box later on. But essentially, the same kind of concepts that you see on this higher time frame, where you have liquidity gets taken, and I entered off the 1 minute area that took liquidity. It's gonna be too long for me to go back now, but yeah, guys, that was everything I had to share with you. I hope you guys got value from that. And yeah, bro, Mehdi, bro, I'm gonna hand it back to you, man. Appreciate that, bro.
Wow. Yet again, what a fire training. Let's do this, man. Let's do this. Hang on a second. Let's put a 222 in the chat box to show our gratitude to Makan. Thank you very much, my brother, for that beautiful breakdown of the trades that you just kind of went through. Okay, I'm going to stop the chat box again. Otherwise, on our screens, it's just going to be popping, right? But thank you very much for that absolutely beautiful breakdown. Now, there is something that I need everyone to understand about these concepts that Makan is now speaking about. We mentioned the term Wyckoff. Obviously, Wyckoff is one of the, in my opinion, best ways to analyze the charts. It's a concept that's from the 19th century, right? It's been around for a very long time, yet it's not a concept that a lot of people know how to trade it. Now, we are privileged to be able to be around individuals who've been trading these concepts consistently for a very long period of time. And something that I understood when it comes to these markets is you got to be around the correct people. That's the bottom line. Don't try and do it yourself. I'm going to speak about that a little bit later on, so make sure to stay on the call, but never try to do it yourself. Never have that ego when it comes to these markets. And please make sure to always get help from the correct people. As simple as that. Okay? Now, Makan spoke about steady. Makan spoke about how you can gain access to it. A lot of you on the call have already got access to these products. A lot of you on the call are maybe just have access to these products or have had access to these products for weeks or months or are looking to get access to these products very soon. Make sure to plug in. Make sure to apply it. Make sure to watch the live videos. Make sure to ask questions. Make sure to utilize the trades that are being sent out to you on a weekly basis, on some products on a daily basis. Okay? Now, I am super excited for the next individual I'm about to bring on. And I'll tell you why. Because this is an individual that went from a stranger to being my closest friend right now, to being my brother, someone that without him, I wouldn't be here. Without him, we wouldn't be building an organization of over 200 people around the globe. We wouldn't be helping a lot of individuals quit their jobs. We wouldn't be helping many individuals get to a profitable stage in their trading game. This is an individual that goes above and beyond for anyone that he knows. And I'm pretty sure you all know who I'm speaking about. It's a gentleman that goes by the name of Shay Lamar. Shay has been trading for about 3 years now. And believe me when I say he has created a lot of beastly traders. Not only Shay's my personal mentor as well, he's mentored hundreds of people around the globe right now as well. And he is going to be teaching you a strategy that, although it's slightly different than normal CFD trading on MetaTrader 4, MetaTrader 5, it is a strategy that will help you get profits literally within 10 minutes. Literally. It's going to be a very new style of trading that some of you might have never actually came across before, but it's a style of trading that by the day is growing, and a lot of people are, making good money from it, is what I'm allowed to say. Let me put it that way. So I'm super excited for you all to be learning this new approach to the markets, this new way of trading, this new way of being able to analyze the chart, something that will hopefully resonate with all of you. So I'm going to go ahead and stop talking and pass it to none other than my brother, my personal mentor, Shay Lamar.
Please. Yo. Listen, Mehdi, I appreciate you, my bro. Love you, bro. Listen, I'm going to go ahead and get straight into the training. But first and foremost, I appreciate every single speaker that was on the call that dropped the value that they dropped. The strategy that I'm going to be telling you guys about, as Mehdi said, is going to be a way for you to make money in 10 minutes, right? Like that's literally the focus of this training, right? But first and foremost, there's going to be a few different steps that I'm going to recommend you guys take, right? And the step number one way to make money in 10 minutes in trading is that you need to understand, well, there's different ways. This is one way, by the way, right? But you want to understand what HFX is, right? Because the way that I'm going to break down for you about how you can actually do this is through a way of trading that we call high frequency Forex, right? High frequency Forex. The reason we call it high frequency Forex is because we're trading high frequency. We're making money in minutes, right? I'm going to explain to you guys a little bit more of a perspective about what high frequency Forex actually is. If I can share my screen, let me just see if it's going to work. Okay, cool. Wait, I didn't want to do whiteboard. Let me just go ahead and redo that, right? But what I'm going to do is I'm going to show you guys real simply how you can go ahead and set up. Is it going to let me share my screen fully? Okay, cool. I think I have to select something properly. Okay, cool. I'm going to show you guys how you can go ahead and set up a high frequency Forex broker because it's slightly different to the way that Mehdi broke down in terms of normal Forex trading. I'm just looking for the way to go ahead and open this up right now. Let's see. Okay, cool. Guys, bear with me one moment. I think I need to open the page up before I actually share my screen. Okay, cool. It's open. All right, perfect. So what I did just now, I just opened a new browser, right? A new incognito browser. What you're going to want to do in order to create a high frequency broker account, you're going to want to go ahead. You can go on anything, by the way. This is just one example of a broker that you could use. If you want to just open any random demo account, go ahead and do that. For example's sake today, you can go on a site called Pocket Option, right? At least you come over here, press start in one click. We are not affiliated to this broker in any kind of way. I'm just using it as an example to illustrate what high frequency Forex really is, right? So basically the way that this works is like this. In Forex, the way that, for example, Macan broke down, the way that, for example, James broke down, and the way that Mehdi broke down is showing you how you can make money by predicting where you think the market's going to go. So let's say, for example, you think that Euro USD is going to go up to a specific price. You're going to go ahead and put into your MetaTrader 4 account, okay, cool, I'm going to buy to that specific price. That's what you're going to say you'll take profit, right? So in Forex, normal Forex trading, there's no time limit, right? As Makan said, you might enter a trade for a day, 2 days, 3 days, like whatever it is. There's no time limit, right? The way that we're trading here is time-based, right? This specific style of trading I'm going to show you, the difference is that it's time-based. We're entering a trade and it doesn't matter where the market goes. It doesn't matter how far the market goes, right? So it's not price-based, it's more time-based. So let's say, for example, we want the market to go up, right? This might look slightly confusing to you right now, but it shouldn't look too confusing. In fact, you know what? I'm going to make this even simpler. And I'm literally just going to get a line chart, right? You can also look at the candles as well, but just for example's sake, right now, I'm going to hop on this line chart, right? What you're going to see here, just so that you guys understand before I go into the strategy, is this is where the different currencies are, right? As you can see right now, the market, because it is a weekend market, these are slightly different currency pairs, but just for example's sake, let's go to this, right? AUD CAD, right? What you can see on the right, is a percentage. What this percentage basically means is what the broker is paying out on that specific currency at any given time, right? And bear with me if this isn't all making sense now. It's going to make sense very shortly. But what that means is that, let's say, for example, we're risking 1% of our account, right? Let's say we've got 1,000. Okay, cool. This is a 10,000 account. Let's say we're risking 1% of that, which is going to be around about 100, right? That means that we're gonna get a payout by winning that trade of £92, right? $92 because it's 92%. And again, this is going to make sense bit by bit, guys. Don't worry, right? But let's say, for example, I've selected this currency as the currency that I want to go ahead and trade. Now, all we're going to do is if we want the market to go down, we're going to sell, right? We're going to press the red button, right? I'm not even going to say sell anything. Just in case you guys don't know what sell or buy means, red means down, right? If we expect the market to go up, we're going to go ahead and press the green button, right? And what we're going to do here is we're going to put the amount that we want to risk, right? One thing that we always recommend is you want to trade with money that you can afford to risk. So let's say, for example, in your account, again, cool, we have this 10,000 demo account. We want to risk, again, I say 1 to 3% of your account per trade. That means we might risk $100, right? So we're putting that amount in. We don't need to worry about lot sizes, any of that kind of stuff. And then right here, we have the expiration time. Right here, we're saying, cool, I'm expecting this to happen within 30 seconds, or we can change it to any time. We can change it to 1 minute. We can change it to 2 minutes. We can change it to 3 minutes, like whatever it is, right? So we can go ahead and utilize that and say, cool, this analysis that we've done, I'm going to enter a buy. Just as an example, haven't done analysis. This is an example of how this works, right? So we enter a buy, and as the market's going up, we're making money. If the market's going down, we haven't made money on that trade, right? That's basically how it works. So you can see here, the market went down, right? So that means that in this current trade, unless this closes above this line, we haven't won that profit for the trade. If it closes below the line, we lost the profit for that trade. If it closes above the line, we won the profit for that trade. And this is where analysis comes in. Because what a lot of people would do is they'll get so excited. Wow, I can make money in 5 minutes. I can make money in 2 minutes. I can make money in 10 minutes. And what they will do is basically what I just did there. They will hop on these charts and just press a button. They'll be like, okay, cool, yeah, I think it's going to go up. Da, da, da. And then they do that. They lose some money. So what you want to do is you want to be able to learn a strategy in order to actually go ahead and apply this. And I'm going to be taking you guys through a strategy. But I'm going to be taking you guys through a 10-minute strategy that you can actually apply in order to go ahead and make money, as I said, in 10 minutes, right? So hopefully that makes sense in terms of how to set this up and all that kind of stuff. Your history of your trades is going to be here. But what you're going to want to do is you're going to want to go on tradingview.com, right? In order to do analysis, in order for us to work this specific strategy, we're going to go on tradingview.com, right? And the way we're going to do this is obviously tradingview.com. You can create an account, all that kind of stuff. I'm not logging to my account on this private browser, but let's say we come over here, right? Let's say we come over here. What we're going to do, there's going to be, and you guys might want to take notes of this just so you really understand what it is that we're using, all right? I'm going to go through a basic strategy for you guys, right? There's going to be 2 indicators that we're actually going to utilize. Let's say, for example, we're going to, I don't know, any particular house, right? Let's go on this, right? In order to add an indicator, by the way, just so that you guys know who aren't used to trading, you're going to press this button right here that says indicators and strategies, right? Add indicator. We're going to search. Number 1 is going to be Bollinger Bands, right? Number 1 is going to be Bollinger Bands, right? Bollinger Bands. So again, just as a summary so far, step number 1 to make money in 5 minutes is to understand what high frequency forex is. Hopefully you guys are understanding that. I'm not sure if the chat box is enabled or not, so I'm not going to ask to interact in the chat box. But step number 2 is going to be to set up your account, right? So that can be a demo account for the time being whilst you practice, and you can select your own broker. And step number 3 is going to be to learn how to actually forecast the market direction. Right? You know what? These ads are kind of annoying right now. So I'm going to hop off and go into my actual account. But real quick, let me just show you guys the setup, right? Add Bollinger Bands, and also you want to add stochastics, right? Add stochastics. And you can use the default settings. You don't need to change any other settings, all that kind of stuff. This is basically how your chart will look. I'm going to go ahead and I'm actually going to go onto my account because all these ads are popping up because it's like the free account or whatever. I'm going to go into my account just so we can really go ahead and analyze this properly. Okay, cool. Stop share screen. Hopefully this is making sense so far, by the way, guys. Hopefully it's making sense so far. So what I'm going to do right now is, as I said, I'm going to show you the strategy. Hold up. Let's exit this. Leave. Okay, cool. I'm not sure if you guys can see my screen or not, though. If you guys can see my screen, Mehdi or someone, if one of you guys can just let me know if you can see.
We can see, bro. We can see.
Yeah? All right, say no more. Perfect. So basically, guys, look, this is the same thing. Don't be confused. The colors are slightly different, right? It's the same thing. It's the same setup that I just added. It's just got Bollinger Bands and it's got stochastics, right? What you're going to want to do, I'm going to break down how to use these indicators. Don't be confused. Don't be alarmed. Sometimes you think, oh man, I don't know if indicators work. Guess what? It's just about understanding how to go ahead and use them efficiently, right? So let's say, for example, we come to Euro USD. What are we looking at, right? We speak about these Bollinger Bands as basically, you can see these maybe kind of like elastic bands, right? See them as like an elastic band. When the market is hitting one of these Bollinger Bands, like the line at the top or the line at the bottom, right? It's likely a lot of the times that it's about to reject, right? It's likely a lot of the times that it's about to actually go ahead and bounce off of that particular area, right? So what we want to do is we want to use that as a confirmation to enter what? To enter a buy. Because if we're expecting the market to go up, we're going to enter a buy, right? Let's say, for example, we're at the higher Bollinger Band and we're looking for a sell, then that's going to be a confirmation for a sell, right? For the stochastics, right? The stochastics are basically saying, listen, this is the strength of the market. So let's say, for example, once the stochastics are above this line, right? Above the top line, it's basically telling you, listen, the market is overbought right now. In other words, too many people are buying right now, so it's probably going to go down, right? This is just a basic way of explaining things, right? If you look at the bottom level, once the stochastics are below this level, that means, too many people are selling the market right now. It's about to come up at some point, right? Because obviously if it goes up, if so many people are buying, eventually people are going to need to sell. That's basically what stochastics tell you in a simple explanation, right? So the way to activate this specific strategy, the way to trade with this specific way of trading is this, right? The first and foremost thing, I'm not going to get into too much detail about it, but we want to obviously understand the overall trend of the market. I'm not going to break that down too much today just for the sake of time, but from this, we can see that the market's going up, right? Just that the market's going up. So what does that mean? If we're in an uptrending market, what we want to do is you want to look for buys, because if we're looking for sells, we're going against the trend. You could, but it's slightly more advanced to do that, right? It's slightly more advanced to do that. So on a basic level, I would recommend trade with the trend. So in other words, we're looking for buys, right? So let's say, for example, right? Let's say, for example, on here, how is it that we're going to know when to buy and when to sell? We're going to look at the stochastics. We want the stochastics and the Bollinger Band to go ahead and line up, right? We want the stochastics and the Bollinger Bands to go ahead and line up. I know sometimes, by the way, I know some people maybe have used stochastics before, or maybe they've used Bollinger Bands before, but I want you to understand that there's different ways of utilizing it, right? Sometimes we look at the stochastics. I remember when I first started using stochastics, and I was like, yo, like it wasn't really working, because I would buy as soon as the stochastics would be down, but then it will continue to go down, right? Or I would sell when the stochastics were up, but it will continue to go up. Why is that? It's because you don't just buy or sell just because it's overbought or oversold. You want to wait for confirmations to match, right? As I said, I'm only going to go for a couple confirmations here, but this is a strategy that you guys can utilize. And one of the key confirmations that you can wait for is for these stochastics. The reason there's two lines is so that we can wait for them to cross, right? Because once they've crossed, it's showing that the market is starting to shift in direction, right? So now not only is it oversold, but the buyers are starting to gain strength, right? So as we get to that point, we can go ahead and enter a buy, right? You know what? Let me go ahead and full screen this. Let me go ahead and full screen this, so you guys can see this a lot better, right? So look, we can go ahead and enter a buy. In this specific strategy, by the way, just so you guys know, we're on the 5-minute time frame, right? We're on the 5-minute time frame. Right? Obviously, you can change the time frame, all that kind of stuff. I'm not going to do a trading view tutorial right now, but on this strategy, we're entering 10-minute trades. So once we see this confirmation, look, the stochastics were oversold, and then they crossed, right? This candle is the candle where it crossed, right? It closed here, that's when it crossed. Like at the close of this candle, this is exactly what the market looked like, right? And we're also at the Bollinger Bands. So once we see that we're at the Bollinger Bands, we've passed through the Bollinger Bands, we've just touched the Bollinger Bands, that is fine for a confirmation for a buy. So guess what? We enter that as a 10-minute trade. Let's see what happens. This is kind of a random point in the chart. Okay, cool, boom, right? See that? The market came up. One thing I love about trading HFX, trading high frequency Forex, is that it doesn't matter how high or how low the market goes, right? Let's say, for example, I entered a buy right here and the market just dropped like crazy. I wouldn't lose my account. Why? Because you're risking only 1 to 3% of your account per trade, right? So because of that, it doesn't matter how far it moves or anything like that. If it goes down, you just lose, right? If it goes up, you win. It's as simple as that. It's very systematic, right? It's very systematic. So it doesn't even matter if it goes up by a tiny pipette, right? It can go up by a tiny pipette and you've still secured the bag in 10 minutes. So let's say, for example, on this specific trade, right? Each candle is 5 minutes, right? Each candle is 5 minutes. So let's say, for example, we entered here. That's a 5-minute candle, right? But we entered for a 10-minute trade. Guess what? The next 5-minute candle closed here, which means that it was 10 minutes. That was 10 minutes of time. We closed the trade in profit, right? Remember, we're in this uptrend, so we're looking for buys, right? We're looking for buys, right? So let's go ahead and see what else we can find. Cool. There's these low entries and that kind of stuff. So you can see here, look, if you would have entered this, because look, the stochastics crossed here, but this is a sell, but we're not in a selling market. We're in a buying market, so we don't want to go ahead and enter that, right? Let's say we come back over here, right? We come back over here. What do we see? We see, look, you can see it kind of messing around here. You don't really necessarily want to enter just if it's just messing around, right? But you can see here that there was a clear, look at the stochastics. I'm looking at the stochastics, by the way. What I meant by messing around is you see here, it's not really crossing significantly. Like there hasn't been a gap between the cross. You can see here, see this right here? This is where the stochastics actually cross, right? The stochastics cross here. So let's say, for example, again, we enter a 10-minute trade, right? Let's see, boom. Entry here at the end of this candle. Like, not gonna lie, like as you guys start to get more advanced and that kind of stuff, you can actually start to catch these entries here. Not gonna lie, but just as a simple example, I'm showing you guys the worst possible entries. You can enter right here, enter for a 10-minute trade, and guess what? Look at that. 5 minutes, right? Okay, cool. We're in profit, we're holding it. 10 minutes, boom, we closed above the entry price. It's a simple, it doesn't need to be all the way up. It doesn't even matter. It really doesn't even matter. We can have the overall direction of the market wrong, but we just need the market to move a tiny, tiny snicket in the right direction, and we're good. We've secured the bag in 10 minutes, right? Okay, cool. Let's see what else we got, right? We come down here. Look, what do we have here? We see stochastics were oversold. Were they not? Stochastics oversold, the market crossed. Can we see a gap between these lines? Yes, we can. Guess when that happened? That happened at this specific candle. We were also at the Bollinger Band. So guess what? We can go ahead and enter for a 10-minute trade. Oh my days, is this making sense? Look, 5 minutes. Okay, cool, we're in a bit of a loss. Oh no, some people be getting scared. Oh man, I'm in loss. No, this is why I use risk management, guys. Not every single trade is gonna hit profit. Don't get twisted. There might be some examples that I'm showing you right now that might hit a stop loss. Let's find out. I'm gonna keep going, right? But check this out. 5 minutes, 10 minutes. This is where the trade closed. We closed in profit. Why? Because we entered a buy. We secured the bag in 10 minutes, right? Okay, cool. Let's keep going. I'm just go through a few examples for you guys just so you understand what's good, right? Okay, cool. Let's see what's happening here. Okay, cool. So we came here. Boom. We had a breakout, right? Look at this. This, again, you can look here, but again, you can see that there wasn't a gap, right? You can see the stochastics are starting to cross a little bit, but there's not a gap. So it's not strongly crossing yet. So entering there is a little bit more of a risky entry. Where you want to enter is where the stochastics have actually clearly crossed. So if you look here, you can see that's the stochastics clearly crossed here after this candle. Let's see, can I bring that down? Yeah, perfect. So now, where's the entry going to be? This entry is right here, right? We're entering at the close of the candle, right? We're entering at the close of the candle. So we're entering the buy. Why? Because the stochastics are oversold. The market is overgrowing up. We're at the Bollinger Band, the bottom of the Bollinger Band, which basically acts like a support, right? Supporting the market from falling down. Guess what? We're entering for a 10-minute trade. Boom. 5 minutes. Market goes down a little bit. Oh no, we're in loss. No, it doesn't matter. We hold the trade. Boom. Right? We secured the bag in what? 10 minutes, y'all. 10 minutes. You know what? Let's keep moving. Right? Okay, cool. Let's see what else we got. Boom. Right? Yo, I can't make this stuff up, guys. I really can't make this stuff up. Damn. Yo, check this out. Right? We come over here. Boom. Stochastics are oversold. Right? Stochastics are oversold. What are we waiting for? We're not entering here. Well, unless you're based on other confirmations, but based on this strategy, we're entering when? Once the stochastics actually cross, right? So the stochastics crossed here, right? It rejected off the Bollinger Band. This one is a bit of a here and there entry. I don't know if I personally would have taken this one because it's not really at the Bollinger Band. I prefer to enter closer there, right? But let's just say, for example, you entered that, boom, 10 minutes, secured the bag in 10. Okay, cool. That's all of them, right? You know what? Let's go on another currency real quick, just to give you guys some more examples, right? Just so we can go ahead and I don't know, just play around with things and that kind of stuff and see what's good. Right, okay, cool. We can see over here, right? AUD CAD. Evidently, AUD CAD is really moving up, right? It's really moving up. So let's say, okay, cool. Let's see. Again, I'm not going to go into analysis in terms of how to identify the long-term trend, but let's say, for example, here, we're looking for buys, right? We're looking for buys. The market's going up. What do we see over here? Uh-oh. Whoa. There's some consolidation. The market's moving around here. What do we have? Stochastics are oversold. Damn, what are we looking for? We're looking for a buy, right? Bollinger Bands. We're at the bottom of the Bollinger Bands. What are we looking for? We're looking for a buy. What do you want to wait for? Stochastics to go ahead and cross. Once the stochastic cross, boom. Check it out. Stochastics cross, rejected off of the Bollinger Band directly. 10-minute trade. 5 minutes, we in profit. Boom. 10 minutes, we secured the trade. We secured the bag in what? 10 minutes, y'all. This ain't a game. Yo, like, you guys need to understand that this is not a joke. y'all need to understand that HFX is not a joke, yo. But look, check it out. I'm gonna go for maybe one more example, right? What time is it? Cool. Check this out. We're oversold on the stochastics, right? Oversold on the stochastics. And then guess what? Right? We're waiting for it to cross. Look, yo, this would have been a snipe. This would have been what we call this is what we call a snipe, right? Check it out. Look, the stochastics crossed here, right? You can see that there was a gap, right? The stochastics crossed over the blue lines above the orange line, right? It would be a different color on your chart, so I'm not going to speak about the colors, but the lines crossed, right? The lines crossed. We enter for the buy, 10-minute buy. Boom. That's what happened. We secured the bag in what? 10 minutes, y'all. We secured the bag in 10 minutes. The reason I'm saying this is because I want every single person to understand the power of securing the bag in 10 minutes. right? Like, how long does it take for us in our job, for example? Like, I remember when I was working, whilst I was at university, and I was working on the side, working 10 hours a day, yo. And when I was doing that, I don't even remember how much I was making, to be honest. It's quite insignificant, maybe like £5 an hour or £6. I don't even remember, right? But that's how much I'm making in an hour, right? In an hour in that job back then, like 3 years ago. And being able, like literally, by plugging into HFX, you're going to be able to secure the bag in 10 minutes. That means that, let's say, for example, you're risking $5, you're risking $10, whatever it is, right? You're able to go ahead and secure just under that amount within 10 minutes, guys. I want you to understand that learning this skill set is worth it, right? Like, you guys can go ahead and play around with this strategy right here, right? Just being real though, like this strategy right here, it's like, it is cool. Like, one thing I love about trading HFX as well is that, I know a lot of people have maybe been looking to trade like HFX, or have maybe been looking to trade, but maybe they're working at the moment. Like, for example, I remember myself when I was working and I was at university, and there wasn't that much time necessarily to be able to plug in the trading and that kind of stuff. And one of the concerns that I had was, man, do I really have enough time to actually learn this skill? I really want to encourage any single person that really wants to take control of their life, just to plug in, because you could be trading in an hour. You can sit there for an hour with this style of trading, learning HFX, getting good at the strategy. Sit there for an hour, secure your bag, and go about your day, right? Sit there for 15 minutes, secure your bag, and go about the day, right? We're talking 10. I'm not gonna lie, right? I'm not gonna lie. These are 10-minute trades, but I've only actually broken down, like, I showed you 2 confirmations, guys. I showed, well, 2/3 confirmations, right? But understand that there's a lot more confirmation you can add on that kind of stuff. In fact, I know we've got quite a few people that are on the team right now already on this call. So for you guys, I know some people don't necessarily have access to this right now and that kind of stuff. For you guys, just bear with me for a moment. I just want to show something to the people who are actually active, a part of our team, right? For you guys, right, what you want to do, go to Go Live, right? Go to Go Live, log in, right? Log in with your details and that kind of stuff. And then what you want to do is go to the HFX session. This is where you're going to be able to learn this properly. Because the style that I trained that I just showed you, it's kind of a basic one, so we can kind of get into it a bit more. You can secure some profits, but if you want to go in, I recommend go to Millie Mills, right? Go to Millie Mills session, because she uses a couple of these confirmations, but she refines them even more. And she adds around about 3 or 4 other confirmations, which makes it so much more profitable, just being real. Like, that's what allows you to enter in 5-minute trades, even 2-minute trades. I like to enter 2-minute trades, just being real. But you can even enter 5-minute trades and secure the bag in 5 minutes. So for those of you guys who are part of the platform, this is what I want you to do, right? Go to Millie Mills' favorite section, go to her boot camp, right, and start plugging into these videos, right? So we got what is HFX, we got payout rollovers. These are like an hour long. This will go into detail. RSI, stochastics. I went into basics. This will go into detail. This is where I learn. This is where I'm learning from all the time, right? So hopefully that makes sense for you guys in terms of the strategy and that kind of stuff. Go back to the favorite section and back to every single person. If you guys just want to go ahead and apply this strategy with the 2 confirmations, that's cool as well. But other than that, that's really my time done. Let me just real quick just check the chat box in case there was any quick questions that I can answer. What are the settings? The settings are the normal settings for the Bollinger Bands and the stochastics. Where can we learn more about the strategy? Go to Millie Mills session for like, assuming you're in the platform. Go to Millie Mills section and go to her boot camp. She's literally recording a boot camp right now where she's going step by step. Like, really understand the power of trading, guys. Like, for those, whether you're a part of the platform or not, understand that there's people here. For example, one of our educators, Matthew Thayer, right? He literally started with $500 and through consistency growing his account, hit 7 figures in the space of around about a year and a half. So regardless of whether or not you're a part of the platform, not understand that the skill set is really powerful, right? So smash it out, guys. And let me read through some of these questions. What will be risk to reward? This isn't really a risk to reward kind of strategy. It's just under a 1-to-1. But you're catching trades in like 2 minutes. So it's pretty lit. What are brokers? For brokers, you can honestly search for your own brokers. I'm not really here to recommend brokers. Pocket Options, one that you could use if you want to, but there's a lot of other brokers as well. Cool. I think that's most of the questions. One more thing that I'll say, guys, real quick though, real quick, is understand this. It can get tempting to just be on your charts all day when you're trading HFX, because it's like, damn, yo, I could secure the bag in minutes. I can make, like, yo, for those of you guys who know about Brand Thompson, you know, he says, I can make 1,000 in a minute. Yeah, y'all could do that, right? But understand this real quick, right? You don't want to just be trading all day. One thing that I learned from one of our educators, Matthew Thayer, is he says, listen, have sessions where you trade for maximum an hour, right? Maximum 1 hour session. So trade for an hour session. If it's less, it's less. And then what you do, if you want to trade for more during the day, then guess what you do? You come out of that session for at least the amount of time that the session actually lasted. So let's say, for example, it's a 1 hour session. You're going to not trade for at least minimum an hour. If you're working and stuff, that's fine. You can just plug in your hour in the morning and go about your day, right? And then also you want to have, in terms of risk management, check this out. This is one thing that will change the game. Because sometimes you hop on HFX, we just want to start trading. No, listen, risk management, check this out. Have a maximum growth before you enter your session to say, okay, cool, look, in this session, the maximum I'm willing to take as growth is 8%. For example, we recommend maybe like 5 to 8% growth maximum in a session, right? And then I'm willing to risk a maximum of maybe 4 to 5%. So if you're down that amount, exit the session because maybe your mind's not in the right place, right? Or maybe the market's moving a bit weird. That happens sometimes. Not every single time you'll win the trades, right? But then if you hit your target as well, stop in the market. You can have a weekly target and that kind of stuff. That's going to help you have consistent success. A lot of people asking for the settings, guys. Honestly, plug into the favorite section, that kind of stuff. All of the extra settings are there, but the ones that I just showed you are just the default settings. I didn't add anything to that one, so the default settings on Trading View. But hopefully that makes sense, guys. My name's been Shay, and listen, I'm gonna go ahead and hand over to my bro, Mr. Mehdi. Right? Shout outs to Mehdi for the hosting. Shout outs to Mehdi for really putting like all of this kind of stuff together, introducing us, bringing us on the call, the way that he's doing it. I'm gonna hand back over to him real quick, my bro. Peace out.
I appreciate you, Shay. Thank you very, very, very much. So there's so many messages that are coming in and so many questions that are coming in. It's going to be near impossible for us to be able to go through all of it. But I'm just going to touch upon something very important. A lot of questions was about this. For people of faith, and we, different faiths at the end of the day have different rules, different stuff that you have to follow, right? So for people of Islamic faith, when it comes to trading these concepts, normal foreign exchange trading, cryptocurrency, CFD trading, all of these are fine. There's not an issue about that at all. Please do reach back to the person who introduced you to this webinar. We have an abundance of a lot of documents, a lot of videos, a lot of detailed explanations that you can read for yourself, for you to be able to have peace of mind that what you are doing is correct. And when it comes to HFX, when it comes to what Shay covered, this is slightly different, right? So again, do your own research when it comes to it, but this is slightly different to foreign exchange, to CFD trading. It's a different type of trading completely. It's not actually taxable in the UK either, which is amazing. But some people of faith might not be able to necessarily trade that. Having said that, trading foreign exchange, cryptocurrencies, precious metals, all of these are fine. Okay, now. First things first, let's actually give it back to Shay for that beautiful training. Put a 111 in the chat. Oh, actually, hang on a second. Put a 333 in the chat box. Let's give it back to Shay for absolutely smashing that training. Thank you very, very, very much. Wow, these messages are coming in quick. Let's go. So as Shay mentioned, as Makan and James mentioned as well, these educators will be trading live with you, right? So now you have access to a strategy that you can literally go away from right now. Open your demo account, start practicing with it, and start to, make the money that you want to be making within a space of 10 minutes. You saw that it's profitable. I literally got a few messages as Shay was doing this training from a few team members who started to apply the strategy. And as Shay started to teach, by the end of that training, they had made a little bit of money for themselves as well, which is fantastic, right? But the more important part is start to master it for yourself, start to practice as much as you can. And a major thing that I'm going to actually be speaking about right now is trading independently versus trading with a mentor, okay? I'm not sure, and I'm going to be as raw as I possibly can. Please don't take any offense into this, but I'm not sure where a lot of the ego when it comes to this industry actually comes from. A lot of people have this illusion that you can do it on your own. And as much as that might be true, to be honest, in some cases, it will prolong your journey massively. Okay, so wanting to do this on your own, or wanting to be self-made, or all of these things, to be fair, we all consider ourselves self-made at the end of the day, right? But wanting to tackle a 6.6 trillion a day market on your own is going to be very dangerous. Let me put it that way. So you definitely do need to be having access to educators. Some of these educators are trading live with you every single day. So you don't even have to actually analyze your own charts. You can plug in and they say buy, you click on buy. They say sell, you click on sell, and you have access to it. So use them. Utilize the products, utilize the services. There's a reason why our platform has been published on Forbes. simply because of how many successful traders have been created. Okay, so make sure to always be utilizing these concepts. Listen, the market, foreign exchange as an industry is not really going to go anywhere. There's always going to be a form of trading, but don't let that stop you from thinking to yourself, oh, this is not going to go anywhere. I can still get back to this in 6 months' time. No, if you haven't traded before, jump into it right now. The best time for you to start trading would have been about 2, 3, 4, 5, 10 years ago. Second best time is today. I don't want to speak too much about recession or too much about a global economic crash, but with the lights of a lot of stuff that has been happening since beginning of 2020, one thing that majority of us have understood is you have to prepare, and that's the bottom line. You have to always prepare. Okay, now you have literally got access to, you saw the information about how the big institutions trade, how the information on social media could be flawed when it comes to these markets, how you can put yourself in the position to trade alongside of the institutions or use certain strategies that they use. And in your journey, and here's the important part, in your journey of mastering how the institutions trade, I'm going to repeat that one more time. Pay close attention because we are bringing this webinar to an end right now, okay? In the journey of you mastering how the institutions trade, or in the journey of you mastering a certain strategy, a certain skill set that will pay you for the rest of your life, you now have access to literally a strategy that can get you paid within 10, 15 minutes. Well, 10 minutes to be exact, right? This is literally earn and learn at the same time. You now have access to a strategy that you can apply straight away, start to profit from it in your journey of learning strategies that will give you access to massive risk reward ratio. So my recommendation to you would be get access to a mentor if you haven't got one already. And for the love of God, do not go for the Instagram mentors who all they want to show is rented Lamborghinis and mansions. I'm going to say it how it is, okay? I said I'm going to be a little bit savage, but it is what it is. So don't choose your mentor based on what you see on social media. Choose your mentor based on the articles that you read about the certain mentor, about the platform on websites such as Forbes, on Business for Home. Utilize platforms or utilize people who know what they're talking about. For those of you who are already partnered up with us, use the services. Plug into HFX, take these trades. As you're mastering your own strategy, take these trades to be able to make money on the side. For those of you who are looking in from the outside, I would highly recommend ask as many questions as you can. There's a lot of questions that are still coming in now as well. We honestly would not be able to answer a lot of these questions right now. We're going to be on this call for another 2 hours at least if you want to go through all of these questions. But my recommendation to you right now would be to go back to the person who introduced you to this webinar. If this is the first time you're seeing this information, go back to the person who introduced you to this webinar and ask them the questions, ask them the necessary questions. Okay, ask them how it is that, you can trade HFX, or ask them, what settings for Bollinger Band was needed, or whatever those questions may be. Okay, reach back to them and start asking them as many questions as you can. But with that being said, a massive shout out to Mr. Yasin Subhan for putting this webinar together. A huge shout out to James, Makan and Shay for beautifully breaking down different ways that you can tackle and approach the market with different mentalities. Massive shout out to Sana for the beautiful notes that she has been putting in the chat box for you all. But this actually brings our evening, or our afternoon rather, to a conclusion. This brings this webinar to a conclusion. Please apply the stuff that you have learned. You literally have access to a strategy that you can make money within 10 minutes, okay? Understand that trading alongside of mentors is always better. Even though you have access to the same strategy that the Go Live educators are trading using, okay? Please plug into the educators and take the trades with them. They have taken out years to perfect the strategy and master it, right? They have taken out years for them to be able to minimize those losses and maximize those rewards. So plug into them, learn from them, and earn alongside of them as you're mastering your own concepts, okay? But with that being said, I'm looking forward to working with each and every single one of you. I'm looking forward to see many more 4, 5, 6, 7-figure trading days being created for a lot of the individuals on this webinar right now. Feel free to reach out to us. If you have any questions, reach out to the person that introduced you to this webinar and ask them as many questions as you like. But I hope you have an amazing evening. I hope you have an amazing rest of your weekend. Stay safe, stay healthy in these difficult times. Master the craft, spend time mastering something that you know will pay you for the rest of your life. With that being said, Pips of Persia here. Have an amazing day and take care.